Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the main stock market, the crypto market, the NFT market, and any other market where we can make some or a lot of money on the internet. Load of discussion today. We have some interesting topics. We had a big move in crypto yesterday. Nice bounce back. Bitcoin's ripped up to 69K before a small pullback. NVIDIA post record quarter with revenue of $68 billion. Shares surged 4%. In other stocks, Circle's up 30% on the day. I think something outrageous. So big move across the board. And Citadel published rebuttal to the Citrini article, which we will dive into on today's show. Also delighted to say we've got Matthew Snider joining the show later today to discuss crypto and fund allocations to crypto. What's going on the institutional side? He's been a long time listener and supporter of the show. Definitely going to provide that institutional angle of what is going on in the space. Can't wait to have that conversation in just a little bit. In the meantime, got Legendary in the co-host seat with me. We are ready to get into it. But just a reminder, friends, before we do, nothing that we say here is financial advice. The market is very, very risky. We do not know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it's Thursday. It's the 26th of February. How are you doing? How are you feeling?
Jim, doing quite well. Apparently, the market is doing quite well as well. I was surprised yesterday when I sent some ETH around to see that 0.1 ETH is above $200 again. That felt good. That felt a bit unusual. It's the little wins, little celebrations that we have. And apart from that, I am also excited because hopefully today I will be able to ship something on my GitHub, something that I've been working on for quite a while. It feels for ages. It feels, and it is to do with this memory layer that I've been working on for my AI agent, and it finally passed all of the security tests, all of the things that I did that I wanted it to do. It's looking quite well in the memory benchmarks that have been testing it with. So I think it is ready, if some final checks hold, to see the light of the world and to hopefully be helpful to others as well who want to give their agent a better memory.
That is pretty interesting. I have noticed that in general, when talking to within one platform, say talking to Claude, trying to keep on top of what it knows. So I think within each project or chat, if you try to organize your conversations as well, right? You want to try to have some type of organization. It's hard to just keep on top of it all. I did see something which Perplexity launched this morning or yesterday. It's very interesting. I think it's basically an aggregator where you can click computer mode or something, and it then is able to run a ton of agents and manage all of them in one go. I don't know if it means manage them in the way that we've been talking about managing agents necessarily, but I don't know if you saw that. Did you see this Perplexity computer launch, and did you have a thought on it?
What type of question is that? If I've seen it, of course I have.
So what did you think? We're sharing it on screen now. What do you think about this?
Basically, the way it works is to a certain extent, it is similar to. Can you still hear me?
Yes, I can hear you.
Hearing some artifacts right now. This is weird. This is very weird. Anyhow, I'll keep speaking. So the way it is working is, I'm hearing sorry, I can't focus. I'm hearing myself in a robotic way, and I think that spaces might be breaking as I'm looking at my roadcaster.
Just carry on.
Okay. So the way it works, sorry for that, is you can plug this thing in and it works end to end from research, design, coding, deploying, and then managing projects. So it is also able to deploy your stuff. Basically, how Manus, that AI tool, was able to do that as well by publishing it. I think they were using Supabase for that too. And obviously the risk here is that if you don't know how to deploy an app and what is important, what are some of the logics and constraints to keep in mind so that you don't have the mold book situation where everyone's agent's token that was connected to Moltbook was leaked to the public, you can run into quite some uncomfy and risky situations. So my hope or my thinking here is that they will have some best practices and skills for the deployment phase as well. And that is not the only thing that came out yesterday, because what also came out yesterday was Claude Cowork adding a scheduler to their features. They have been trying to push this into a more agentic direction. Obviously, as OpenClaw is so successful, and Peter went to OpenAI with it. Said it back then when we talked about it, that I think that Claude or Anthropic will do their best to push more autonomous, more agentic features as well. And what they have been doing is adding this scheduler, so you now can say things like, I want this briefing every morning, every Friday I want this weekly review of my YouTube channel, every Thursday this and that is to happen. And at the same time, Anthropic also has, over the last couple of days, added a couple new skills, including finance and wealth management skills, that allow you to have an investment pitch prepared, to have an investment analysis, to have a portfolio rebalancing. So they have this added too. And the other one that I found interesting is the finance one, which allows you to prepare income statements, reconciliations, variance analysis, financial statements. So they've been very, very aggressively growing their native skill library, and obviously putting these together, having templates for what works well, plus the option to schedule stuff, which you can do in ChatGPT as well, for example, is taking that whole Claude Cowork interface into a way more autonomous direction.
Very, very interesting. I'm still kind of the belief that, I don't know, it just feels like someone's shipping something new every single day at the moment, which is exciting. It's fun. I don't think, and we spoke about AI anxiety on the show last few weeks a little bit, the feeling of getting left behind. I do think you should experiment, but I don't think you should beat yourself up, because I think someone is going to, or maybe multiple teams, to be fair. I don't think, maybe it's not going to be one team. There's too many people going at this at the moment. A variety of teams will come up with ways to make your life much, much easier and not have to interact with or like spawn up your own agents that have access to different things in an unsafe way. You're not going to have to worry about it as much. I think whether it's Google, whether it's Anthropic, whether it's OpenAI, whether it's Perplexity, any of these teams, or whether it's anyone else in this arena, they're going to figure out a way to make it very, very smooth in the same way. And actually, this is the same gripe about crypto, to be perfectly honest. I don't know how, maybe people made too much money in crypto too fast. It shouldn't feel like you're doing crypto necessarily. If you want stuff to be beautifully designed and taken up by a high number of people, you want it to just melt away into the background and just, log into your app, whichever app that is, whether it's some type of super app or not, and you just use the product and it does all the things that you want. You don't need to have the constant friction of MetaMask, your crypto wallet, pressing buttons, having failed transactions, MetaMask going down, or whatever is the case. The UX has to be smooth. And I think at the moment, yes, there's always opportunity and friction. And so, getting ahead and experimenting will be fine. I think as long as you're, still curious when these new products are smoother, and I think that they're moving towards that direction at a rapid rate, you're going to be fine. So we've had a lot of doomerism recently, and that actually ties in with one of the headlines today. This, not the Citrini article, the Citadel article, which will kind of provide the more optimistic outlook as well. Ledge, any final thoughts on that before we get into the headlines today?
Yeah, I mean, you kind of mentioned the other part of it, that the opportunity is in friction. And I'm taking the other point. I think you should beat yourself up to a certain extent if you're not playing around and not being on the experimental fringe of that. If you see AI as an opportunity you want to seize and you want to have some sort of gain from. If you don't see that and that's not an opportunity you want to pursue, obviously that is perfectly fine. But if you want to, then I think this is now the time to, and it's gotten so much easier and so much better. This is now the time where you will still have friction. You can still make meaningful contributions. You can still find a very good amount of opportunities within that. And it was the same case with crypto as well, that the higher the friction was, the more difficult it was to do things, the less people could be bothered to do them, and the higher the individual's return was who were actually doing them. And I think it's the very, very same here. And on that scale, we are already pretty late and early, but we're already pretty late because it is way easier to use Claude Cowork. Like, it's a MacBook app that you're downloading and you're speaking in your native language, whatever that is, to a thing which is doing things for you, which is a way simpler process than figuring out how to, I don't know, operate for the first time on an L2 and set up your wallet, or figuring out crypto. When I got back into ETH, when you did not have a MetaMask wallet, you had to install the whole damn state of the blockchain on your system to be able to spin up a Mist wallet. And that took me, I think, almost a day to get a wallet up and running. And now it's pay $20, download an app, and you can vibe code away.
Indeed. Definitely agree with the general principle, which is there's opportunity and friction. So there we go. Let's get into the main stuff today. As I said, we've got a ton of interesting headlines, and then super interested in our conversation with Matthew. Towards the end of today's show, we'll get into crypto and funds and how people are allocating at the more institutional level. Very, very interested to have that conversation today. Let's get into it, starting with the price action. As always, we have positive news. Bitcoin moved up almost 4% to just under 16. Well, moved to 69K, has dipped just beneath now, sitting at 68.2. ETH is up 7% to move back over $2,000. We have XRP up 4% to $1.44. BNB is up 3% to 624. Sol's up 5% to $87. And we have Hyperliquid, which is up 5% back to $28, getting to more meme coin side of things. Got Doge up 5%. Pepe's down 1%. Pump is flat. Pippin is up 10%. Of course, $850 million FTV. Lord, what is going on? Up 72% on the week. Wow. Okay. Well, we talk about it every day. We keep saying we don't know what's going on there, and it just keeps going up. But I would be certain that the day we buy is the day it goes down. But I don't know. Outstanding supply control from whoever is the majority owner of Pippin here. SPX is up 7% to I think 300 mil. And yeah, generally green day across the board here. That's pretty good to see. Getting into the headlines themselves, we'll be talking about Bitcoin's move back up, along with a little bit of a roundup on the majors in crypto. But also, we want to talk NVIDIA posting their record quarter with revenue of $68 billion. Shares have surged, and I think the market in general took a lot of strength from those numbers. So we'll touch on those today, and then we'll get into the Citadel article, which is published sort of in response to the Citrini article, and it's far more optimistic in a variety of ways. We'll explain what that position is and where we stand on it. Getting into the other news that you need to know, Circle reported Q4 revenue up 77% year on year. Share price surged $35. You know, I was actually short Circle yesterday. And I closed my short. So I will take that as a win. Mr. Beast, employee fined for insider trading on Kalshi. Tether invests $200 million in creator economy via the WAP platform. Tether really aggressively investing over the last few months. We've seen a number of investments that they've been making. Hyperliquid reveals 173,000 Hype will be distributed to its team on March the 6th. I believe that is a number which is lower than what was kind of forecast. Hyperlend will launch its token paired with USDH today. That's, of course, one of the main lending protocols on Hyperliquid. And Rec Drinks announced they'll be stocked in Waitrose in the UK from April. Shout out to Waitrose, one of my favorite UK supermarkets. And finally, this was cool. GLDY is now live on Base. It's the first institutional grade gold-backed token, and you get yield. on it. I think it comes out at around 3%. And if I understand correctly, the yield is generated from, because when you hear about yield, you always want to ask the question, well, where does the yield come from? They said it is paid in gold monthly through gold leasing. I don't 100% know what that means, but I am intrigued. So either we'll dive into it later today or we'll dive into it separately. Just wanted to bring it to your attention because I think that's interesting. That is the roundup to get you up to speed with everything that you need to know with that out of the way. Before we get into the main stuff, Ledge, what's catching your attention here?
So actually, I wanted to share something else, but the gold leasing stuff caught my attention. So
Yes, please explain.
I'm gonna do two things. I'm gonna get two things up on screen, one after the other. Let me start with the gold leasing first, because I had no idea what that is, and let's do a bit of live research on it, maybe. So this is StreamX's website.
Yes, bring back the live research. I like those days.
Gold leasing, enabled by monetary metals. Gold leasing is the foundation of GLDY's yield generation model. It transforms idle gold holdings into productive income generating assets without selling or relinquishing title of the underlying metal. Through StreamX's partnership with monetary metals, gold held in custody is lent to eligible and approved businesses in the gold ecosystem, refiners, mints, and jewelry manufacturers that require temporary access to physical metals for operations. In return, these lessees pay a lease fee that is denominated and settled in gold, allowing investors to grow their holdings over time in real metal terms rather than fiat equivalents. So
what do they need it for? When someone in the gold industry, says, "Oh, I need short-term access to gold. I'll pay you back later." What is the requirement there?
Maybe you are a minting company or you're a jeweler. You want to do some jewelry, and you are out of gold, and then yeah, you say that, but what if there is all of the gold is only available at the surplus, and the surplus is the premium is so high that instead of buying it at a 20% market premium, maybe you'd rather borrow and pay it back 3 months later in gold and pay only 7% on that.
You say what you were going to say after, and I'm going to ask Claude.
Yeah, you do that, and I'll actually go to something that came out yesterday outside of China, and that is Seedance 2.0, which is ByteDance's most prominent video generating model. Definitely made a ton of headlines, a ton of viral videos, whether it's what was it, Brad Pitt fighting, Jackie Chan videos, all the other things. Is also generated by Seedance 2.0. A couple short films as well, and it was only available until now in China and was not as easy to get access to it. You had to sign up with a VPN. You needed, I think, at least a Hong Kongese phone number for some of the things. But now you can try it outside of China. It is on CapCut, which is a video editing tool, and it is available on the desktop version of it and also via API, which means it will be integrated with other services, presumably like OpenRouter and others as well. And it is definitely something I would recommend to play around with just to see how video generation has changed over the course of the last year, because the quality of this you can generate, I think, in up to 4K is insanely good, insanely realistic.
So what are we looking at here? We're looking at a story about a monkey or a chimpanzee saving a toy chimpanzee in a zoo, with some lady getting very upset and the skies parting and a Japanese god emerging in the sky. Is that a
bit of fighting? Couple monkey fighting scenes as well.
I'll say one thing about this video generation stuff, and again, I think maybe we've made this point sometimes. People think the marginal cost of the human is going to zero, and I do think on a long time frame we are becoming less useful. But I saw one of these videos shared the other day where someone said, "Oh, this is like a video with a full plot," and it might have actually been you sharing it, Ledge. It was like
AI man, that was me, yeah.
Yeah, AI man.
Great.
I thought it made no sense. Like the story made no sense. Yeah, there were like really cool aspects, but there wasn't the cohesion. I think that will be the key skill in doing this stuff, creating something cohesive. Even looking at this cool video of, I don't know, some people, some animals kung fuing each other and doing various things. It's very incongruent to me. It just doesn't. Nothing really adds up. It's just a bunch of random stuff. And so I think the meaning in content is brought about through not only the visuals, which, as you say, so one of the key points is that the visuals are amazing. So that is a huge step up, but the cohesion is what I think will need to be improved. Well, I think that comes from the prompting, right? So that's the difference.
That's the human element right now,
That's
right?
the human element still.
You generate 8 to 15 seconds second videos, and you have to like basically clip them together if you want to tell a longer story. Let me show you something else real quick. Where is it? Maybe you like this more. So what someone did here is generating a deep fake of Germany's ex-chancellor Angela Merkel, and using that deep fake to have a briefing read to them on a daily basis in Angela Merkel's voice with a German accent.
Mexico's Culiacan has descended into a cartel war zone. Trump is keeping the world waiting on Iran ahead of Geneva.
Yeah, this is just funny.
Thursday.
That's just hilarious. Like you can have your personal version of anyone.
Yeah, you can have whoever you wanted to narrate the news for you, narrating them for you. Also see Phunky with his hand up. So definitely curious to hear from you on the video generating side of things, Phunky.
Okay, first thing, GM, I just want to say that I would love to have George W. Bush narrating my news to me every morning, because I think that would be hilarious.
Would you rather do that instead of listening to the Modern Market?
Oh, heck no. No, I'd rather listen to the Modern Market, especially now the space isn't working. No, but when you described the animated monkey video, I would love to see it, because I think you guys are so far down the AI rabbit hole that you didn't recognize Punch, who is a viral sensation, this little monkey in a zoo somewhere that just keeps clinging to a stuffed toy because its mother abandoned him. And he's become like, I see, of course, I see a lot of cat videos, a lot of nature animal videos, and he's become like this massive sensation. So I'd love to see the Seedance thing. And I do play around with CapCut. So I'm kind of curious to try this out myself, because I use the desktop version a lot to edit our podcast. So really interested in seeing this stuff integrated.
Yeah, I'll post it in the Telegram chat right now as we speak.
Yeah, post it in Telegram chat, and also in the Telegram chat on the YouTube comments. Just know Legendary is working on deep fakes of all the Modern Market hosts. What else? How else can we provide for you during your day? We do the daily show. If you have any other ideas for how Legendary can provide for you, it's only his deepfake version that is working at the moment. So if you have any Legendary deepfake requests, let us know in the chat.
English has a different thought on that, by the way. English in the YouTube comments is saying, this show feels like AI from the lack of a cohesive argument from B. The real B and Legendary are on holiday.
That would be fine with me. That would be fine with me. I have always said from the beginning of the show, the reason why we produce content every single day is so that one day we can hand over to the AI overlords. And we're probably a reasonable distance away from it on the live show, but maybe this deepfake stuff, we can palm off some of our other responsibilities. Let's see. Just a quick update on the gold thing before we get into the headlines. The most common reason for gold to be leased is that it's working capital for miners and refiners. So a gold mining company might lease gold from a central bank, sell it immediately at spot price, use that cash to fund operations, and then repay the lease later with gold that they've already mined. So I think it's kind of part of like the business flow for some of these miners and refiners. But it says here often at a rate 1 or 2%, which is a great rate for them. But this GLDY token on base going live is paying at 3 and a bit, maybe because of the higher gold prices now. The price has been pushed up. I don't know 100%, but I think that is very interesting to observe. Right, let's get into the main headlines today to get you up to speed with what you need to know. Ledge, I think you're going to take us through First, the big crypto move up yesterday. We haven't been able to say that in I don't know how long. What do we need to know about the move yesterday? It was pretty big. And then maybe you want to wrap up the stocks conversation after NVIDIA earnings into this conversation as well.
Yeah, I'll tie these two headlines actually together and give a more comprehensive review. I think one of the things that happened yesterday is that President Donald Trump did give the longest ever State of the Union address, 1 hour and 40 minutes long speech, surpassing Clinton's previous record of 1 hour and 20 minutes in 2000, saying that the United States is winning again. It is in a very, very good position. Inflation is low, employment, all the numbers, everything is looking great. Also, there was a major policy announcement during the speech regarding artificial intelligence infrastructure. Trump unveiled a so-called ratepayer protection pledge, saying that many Americans are concerned that energy demand from AI data centers could unfairly drive up their electric bills. And he says that this is that large tech companies would be required to generate their own electricity instead of relying on local power grids. A unique strategy never used in this country before. And then going on to say what else is going well and why market jobs, everything is looking well. And the US is back on track to win again. This is the one thing to keep in mind. The other thing to keep in mind is coming from the institutional side of things for Bitcoin specifically. And that is simply that we have started to see significant inflows into the ETFs into the ETFs again. 506 mil yesterday, 260 mil the day before. So a good amount of dip buying going on, and mainly being caused by the institutional side of things. That also made it the highest inflow day since February 2nd. So for 24 days, there was not a single day with more than 500 mil in inflows. That, as you have said, has helped the Bitcoin price significantly, has helped it to go back to 69K, has settled at around 68K. And also what certainly has been a positive contributor to that is if we take a look at the S&P 500 map, it looks beautiful. It's very green. All of the tech sector is up. We have Apple being up 1%, Amazon same, Meta being up 2%, Tesla being up 2%, NVIDIA now being up 1.5%. You're going to get into NVIDIA specifically in a bit. Basically, except for AMD, the entire semiconductor sector is green, and AMD is up over a longer time frame as well, as they had, I think, a day where they were up more than 10% as a result of a Meta partnership. But there's just a small correction on this initial pump. And what we also have had is NVIDIA announcing a very, very good quarter, actually a record quarter with a record revenue of $68 billion, being up 20% from Q3, up 73% from a year ago. So they closed the last quarter in a very, very strong position, Q4 2025, that is. Also a record year when it comes to the full year revenue, 215 billion, up 65%. Basically, that has helped the NVIDIA stock price to surge 4%, corrected down a bit. As I said, it's still up 1.5% over the last day. And they have a very strong outlook for 2027 to come as well, where they expect revenue to go even higher, go as high as $78 billion. And I think one interesting point in there that I also wanted to point out was, where was that again? Yeah, there we go. That they unveiled the NVIDIA Rubin platform, 6 new chips to deliver, and that they will provide Amazon Web Services, Google Cloud, Microsoft Azure, and Oracle Cloud Infrastructure to use that new Rubin infrastructure, which is coming out of NVIDIA. So basically all of the biggest cloud providers in the world.
Good stuff. I'll add just a couple of things. There have been some reporting that one of the reasons Bitcoin moved again was in line with Jane Street getting sued for or a lawsuit accusing Jane Street of insider trading. Jane Street being one of these big kind of, I think it's like a high frequency trading fund they're often involved in very large amounts with I think like right now, for example, they have a colossal silver position. For example, they're very much on the edge of they're very, very big traders, basically. And I think this accusation, some people have suggested, is in line with Bitcoin's move up, because according to that perspective that is out there, there was routine selling taking place, maybe Jane Street being one of them. I'm not entirely, I don't particularly buy that message necessarily. I know that the price has turned just as that accusation has been made. But also this is to do with something, the Jane Street story is to do with something that happened years ago. It's to do with Terra, to do with Luna. That was a really, really long time ago. I don't think these two things are correlated. Just because they happen on the same day doesn't mean you have to attach the meaning to each other. So I'm just kind of sharing that is an idea that is out there. I don't think there's much validity to it. I also don't think just because crypto goes up 6 or 7%, we're necessarily out of the woods. Although, again, when we're thinking through this risk framework that we like to talk about, it's obviously better to buy Bitcoin at 67 than it is to buy at 117 or something like that. So, you're in good risk reward realms, even if we go lower from here, which is definitely the setup that you would prefer, right? I think, compared with other scenarios. And then one final thing, just on the stock side of things, I closed all of my shorts yesterday down a little bit. So I lost a little in the process because I thought NVIDIA would beat earnings. I thought the market would move up after. I was very short circle. I dodged a big bullet there. They crushed their earnings and the stock's up 30% in a day. I think, again, we've spoken about this a little bit recently. A stock like Circle moving 30% on a day is just indicative of where we are in the market, where no one has great certainty or confidence in anything, I don't think. It's very headline driven. It's very emotional trading, it feels like. And so I think you want to be quite, either you just opt out and you just, you sit in cash if you prefer that, or you just sit in the index, or you recognize that if you are going to participate in stock picking, that this could be fast moving stuff. For example, when we talked about Intel ran up to, I can't remember what it was. Did it run up to all the way to 60 on the back of all this Trump news and the admin supporting Intel, taking a stake in Intel, went from like 20 to 55 at least, or something like that. It's pulled back all the way to 42 or something like that now. And so I think you're just going to have to be really, really nimble in this market if you want to trade it. I do think there are options of not trading it. For example, just buying gold. If you think that the thesis that the dollar is going to get devalued over the next however long, gold is up 50% on the year or something outrageous. And if you think about risk reward, I don't know if that will necessarily track and continue, but if you could even get another 20, 30% out of gold this year for just holding gold, and the rest of the market is swaying the way that it is, I quite like it from a risk reward perspective. But Ledge, coming back to you here for some thoughts.
Yeah, just a little addition. Gold is up 80% over the year. It's insane run, and almost back to 5.2K, by the way. And I did see that 10 a.m. Jane Street article, which basically, what was the claim in there? Their algorithms were dumping BTC every day at 10 a.m. and now the dumping stopped because they don't have the time to focus on that anymore because they're hit with the Terra lawsuit. Yeah, it doesn't sound like a reasonable story to connect these things together, but it's also
very dumb. And can I just point out one thing to people in the audience who are listening in? Usually the block is pretty good. This is an article written in the block. The people they're quoting to write this article is famous crypto commentator Bark. If you know who Bark is basically, I mean, we don't want to, I would not say, I'm going to be careful with my words. I would not say that they are considered to be reputable crypto actors or reputable crypto commentators. Pretty much engagement farming, all kinds of content. I think even underneath that post, they had some actually reputable people respond and say, like, this is not. Alex Kruger commented. I saw his comment on a scale of 1 to 10, where 1 is where 1 is fully retarded and 10 is brilliant. This analysis is a solid 1. Congrats on the engagement. And Alex Kruger is an excellent person to follow. So, like, you got to, when you see these headlines, sometimes you really need to drill into where the information is coming from, and sometimes it's just not useful. Usually the block's really good. I think they made a mistake on this one personally, but just wanted to provide that context.
Yeah, that reminds me of this meme and of this time in the market where we're blaming Wintermute for everything.
Yes.
And this meme went viral with a guy on a bike, and he basically has an accident, is crashing on his bike, is hurting his knee, and he goes like, fuck Wintermute. So
yeah,
that is now Jane Street. Basically, Jane Street's the new Wintermute. We just blame them because we were directionally wrong and BTC had a correction. And look, there's also other parts to that. Like, I'm not saying that Jane Street is the most innocent company out there. They've been slapped with a $450 million fine by Indian regulators last year or the year before, and that is something that obviously was illegal based by the Indian regulators' opinion. Otherwise, that case wouldn't have ended with this massive fine. And I think that was the allegation of insider trading that helped them to generate more than $4 billion in profit, and hence they had to pay this fine. But I just don't think that you can blame BTC being at 60K now recurring to 69K solely on Jane Street doing things that might be dubious or might not be dubious.
Exactly. Okay. I agree with that part. Let's get into the final headline before we get into our conversation with Matthew in just a little bit. This is the headline that Citadel, famous Citadel Securities, has published an anti-Citrini piece. It's called the 2026 Global Intelligence Crisis. You'll be familiar that Citrini came out with their piece not long ago, suggesting that the attachment to the AI race and AI supremacy is going to be incredibly bearish for labor, human labor over time, and that would cause a eventual 30% plus correction in the S&P. Whereas Citadel, very prominent trading firm and market maker, have come out to kind of suggest some other data points which might be worth noting. The main argument is that AI labor displacement panic is massively overblown. The data doesn't support it. At least some data points here for your interest. Software engineer job postings are up 11% over the year. Daily AI usage at work has flatlined, according to St. Louis Fed real-time survey, and labor market trackers are actually improving in general. I would put a question mark against that sometimes, but I'm not necessarily trusting all the data that's coming out as it relates to unemployment and labor at the moment. However, the core point is that recursive technology does not equal recursive adoption. Just because AI can improve itself doesn't mean the economy absorbs it at the same exponential rate. And they share some important reasons for that. They said adoption follows an S-curve, not a straight line. It's bounded by compute costs, which at the moment people are struggling to get the compute right, regulation, organizational friction, and the simple fact that if compute gets more expensive than human labor, firms won't substitute. And this matters because at the moment, markets are pricing in displacement future based on these kind of thought experiments, but not actually the data at hand. They say that the near-term reality is inflationary, $650 billion in AI CapEx, 2,800 data centers planned, construction hiring is surging. Citadel's framing flips the narrative. AI is a positive supply shock that expands output and real income, not a demand destroyer. And I think he made an interesting point towards the end, talking about how, and as we've spoken about on the show, right, how the utility of the human has declined over time. We used to work 6 days on a field, then 5 days in a factory, then 5 days in an office with time constraints around it. Now it's like, okay, work from home 1 day and, maybe coming up with a 4-day working week or something. Talks about how Keynes predicted a 15-hour week by now, famous economist. He was right about productivity, but wrong about human nature. We didn't work less, we just consumed more. So Citadel's bet ultimately in this article is that AI follows the same pattern. It will not be enough to make labor obsolete, but maybe enough to offset. And he talks about these big headwinds: aging populations, deglobalization, climate drag, which are big issues. And I think maybe the ultimate point, or one of the ultimate points, is that any type of humongous collapse that Citrini, any type of big collapse in the labor market is simply not politically possible. No government or entity in charge of a country will be able to allow this amount of displacement at the rate that it is projected to be. So I think that is a slightly sobering and helpful reality check on what some people were describing a little bit of kind of sci-fi fiction, which was the alternative scenario in a world operating in a world where no one is gonna, a completely free market where the AI people get to do whatever they want. And I don't think that's the case. So it was a very helpful article. Ledge, coming to you for your thoughts here before we get into our further chat.
With some of the points I agree with, some of the points I disagree a bit more in the article. The thing which probably makes me disagree most is like comparing it to past tech waves, which obviously have had massive impact on global society, but took a longer time to play out, and everything is accelerating and nothing has been accelerating like the AI development is. So that's the one thing where I'd be a bit skeptical about. And mostly I agree with the counterpoints. Apart from that, then the only other thing I would have picked out is that governments won't allow massive job displacement. How? Like, how do you want to stop? Like, I mean, okay, I know we're in Austria. In Austria, if you want to fire a certain amount of people from a company, there's actually a limit of how many people you can fire. Then you have to wait for another 30 days before you can fire more people. If you want to do mass layoffs, you can't be like, I'm firing 80% of my employees today. You have to space it over a couple of months because we're a regulated country. But okay, it just takes you a couple more months time, like even in an overregulated country. So I'm not seeing how governments globally around the world could force companies to be like, I force you to keep all of the people that you need. And because then the incentive becomes for a country to say, okay, I'm not going to force you to do that. So if you had 1,000 employees, you only need 50, to make an extreme example, move to our country, bring those 50 people, hire them there, and we are going to allow you to do that. And because you move here, you're going to pay taxes here. You're going to have a couple $1 billion in profits here. And similarly, how you have tax evasion, you then would have AI labor or human labor protection evasion if you wanted to run a fully autonomously AI company or with 90% less people in there. So that's the one argument that I don't believe is as strong as the others.
That, I think, is an interesting point. I think we're entering this kind of different world in some respect where I think people are switching roles. I think America is going to become much more like China. There's going to be a lot more state intervention. Clearly, the administration is taking stakes in companies. And so when you start to take stakes in companies, you start to be able to dictate, well, okay, NVIDIA, if you want to sell to China, this is what you're going to have to do. You're going to take off a slice and you're going to have to give it to us. All right, Intel, if you're going to be this important in the future, you're going to take off a slice and you're going to give it to us. And, just taking that thinking forward that thinking, thinking through that line of thinking, where does that take you? I don't know exactly. I don't know if Intel or NVIDIA are allowed to leave America. Maybe they can try. I don't think they're allowed to now, but let's see. It's an interesting one to come back to. Would love to actually chat to get Matthew's perspective on this as well, who's about to join us on the show. Very sophisticated crypto participant for quite some time. I'm delighted to welcome to the show today, Matthew Snider. Matthew started his career in management consulting before going deep into crypto in 2017, co-founding Block3 Strategy Group to help brands and businesses build blockchain go-to-market strategies. He's also a registered investment advisor, representative, published author of Warren Buffett in a Web3 World, very cool book. And he was chief investment officer at Digital Wealth Partners, an SEC registered RIA specializing in digital assets. Today, we'll talk about bringing institutional strategies for crypto, why most advisors are still not on board at the moment, and if what kind of traction there has been more recently, and how Buffett's principles apply to the most volatile asset on the planet. Matthew, it's great to have you on the show with us. Welcome to the show. How are you doing?
I'm doing so great, guys. Can you hear me okay? Fantastic.
Yes, the audio is
awesome. It's great to be here, and just thanks so much for having me. Excited to dive in.
Great to have you with us, man. But very curious, just before we get into, what you're doing at your company and your general perspectives on the institutional side of crypto, and even some of these life investing lessons that you've kind of compared with Buffett and this industry. What's your take on what's been going on at the moment with this Citrini article and the Citadel response, and how the world has got so obsessed with the AI narrative at the moment?
As somebody who lived during a time when we thought the internet was going to take everybody's jobs and all these things were going to come and everybody was just going to get destroyed by technology, I think it's interesting. I think that people need a narrative to come to, or to try to think through in terms of those sort of catastrophic things, right? We're not going to post blog posts about, oh, AI is going to just make our coffee for us and it's just going to be fine and everybody's going to get along hunky-dory. We have to take extreme views. And so you're going to see a lot of these articles that come out that talk about really far-reaching areas of the spectrum in terms of the effects that this technology is going to have. So it's not really surprising. I think both of them are pretty hyperbolic in some regards. I think people are just kind of like going out there saying, here's the worst possible things that could happen. And we're all trying to figure it out, right? Like we're all in this sandbox together, trying to figure out how this technology works. And it's really just exciting to see. I always take it with a grain of salt, but it's really, really important that people start having those conversations.
How have you noticed the change in interest from, you've been very much involved on the institutional side of crypto allocation for a while. Have you noticed a big displacement or people's attention getting taken elsewhere? Or do you feel people are as committed to crypto as you maybe had become accustomed to in the last few years?
When it comes to the investment advisors, I've spent a lot of time going door to door, especially locally, knocking on wealth managers, investment advisor offices to see if they want to have a conversation about digital assets. Are you putting them into your client portfolios? Are people asking about them? Could we do a survey to find out how many clients might have assets held away that you're not billing on, so that we could try to figure out, what that looks like for you as a firm? And one of the big things that I keep getting pushback on is that they're not interested so much in allocating to something like Bitcoin to outperform a traditional 60/40 portfolio by 2 or 3%. They're worried about wealth preservation. They're not worried about a couple extra base hits that might earn them a yield or like a higher return over the course of the year. So I think that is interesting from just a wealth management perspective, is it's really about building a holistic portfolio for people, and they're just not super interested in taking these larger bets on crypto quite yet. But from a fund allocation perspective, I was over in Miami yesterday and Tuesday for the Miami Hedge Fund Week iConnections events and conferences, and nobody was at the Wintermute event. Let's just put it that way. But there were a ton of people just interested in getting together and talking about crypto. I was at another event that was hosted by BitGo and the guys over at Crypto Insights Group. Just a phenomenal gathering. Everybody was really, really excited, but there is a little bit of despondency in the market. A lot of these funds have not performed particularly well, especially at the end of last year and at the beginning of this year. So it is an interesting sort of dynamic to see. And the work that I'm doing right now is really involved in just helping people stand up those funds.
That's really fascinating. So you said you're on the ground in Miami at the moment. What was the main learning or takeaway that you're getting from being on the ground at the moment?
A lot of people are really trying to figure out how they can leverage, I think, stable coins and yield strategies where they can lower risk profiles in overall portfolios, especially when it comes to managed capital. And so you can take some interesting strategies that relate to stable coins and whether it's through liquidity pools or through yield opportunities. And it makes it possible for you to generate more consistent returns. That's kind of the thing that people are trying to do, is generate a smoother return profile so that their investors feel more comfortable leaving money in there. You'd be surprised at how many private placement memorandums or sub-documents people read with all these risks of what can happen to your capital and the high vol, right? Like crypto is a volatile asset. And the minute you have a quarter where you maybe have a bit of a drawdown, people are kind of running for the fences and trying to say, like, I want to redeem, I want out. And so it becomes a question of how do we smooth those returns and set better expectations for people who are making allocations into some of these crypto funds so that they don't feel so scared all the time, or they're not concerned that, like, okay, maybe we had a bad quarter. But it's also scary because some of these funds don't last very long. And it's very hard for people who don't have a track record. If you do have a track record in this space, maybe it's 2 or 3 years. Some of the best funds have track records of 4 or 5 or 6 years. Warren Buffett's is 65 plus years. So, there's kind of a dynamic there where just because it worked in times of decent market action, the 22, 23, 24, doesn't necessarily mean that it's going to continue. And so they have to figure out ways to kind of smooth that over and temper expectations.
Maybe taking a step back here in terms of the stablecoin yield, like how would you say is the level of education and also the trust in when it comes to stablecoins? Is it something that is now being viewed as a fully equivalent alternative vehicle to earn yield on your dollar, or is there like still some skepticism persisting around stablecoins per se?
There's absolutely an appetite to understand. There's kind of this sweet spot of where you can have, say, a money market fund right now, whether it's at maybe 3%, 3.5%. I think Coinbase has a 3.25% savings rate on their stablecoin yield right now. You could basically get the same if you get a high savings yield, kind of like Wells Fargo or Bank of America, something like that. And trying to be anywhere from like 3 to 4% to like the 5 to 6%, where you can still have the same level of sort of risk return and profile, but how do we bump up that yield to a couple other basis points higher, basically, so that we can feel like there is a little bit less risk in the system, that we're kind of generating, like I said, those smoother returns. There's absolutely appetite for it. Some of the stuff with respect to like the Terra Luna collapse and being associated with some of the periodicals that have come out recently certainly give people a little bit of pause. But the Circle, the Circle earnings yesterday were just really, really great to see. A breath of fresh air and a legitimacy for that space. And as I posted in the comments, if you're a Coinbase holder, this was also a tangential benefit yesterday because they earn a lot on the fees that are generated from Circle. So if you're a Coinbase shareholder, you benefit from that as well. And I think that the things I'm excited about are people being able to build stablecoin yield funds that offer people that higher that higher return profile on a much less risky asset class.
Gotcha. Yeah, that makes a ton of sense. I want to take it in a bit of a different direction. You clearly are a Warren Buffett fan. You've written the book. You also have been playing around with AI quite a lot. There we go. You set up your own trading bot to follow Buffett's principles and try to stay alive. $200, I think you said it was, and the rule is just you lose if you lose all the money, you die. So maybe first of all, what is it that fascinates about Warren Buffett, and which of these principles do you think we can carry over both in the Web3 world or now in this AI agentic world in terms of investing and identifying opportunities?
Well, especially with the book, part of the reason I wanted to create something like that was the total counter position that Buffett has for crypto. Like, just because he hates cryptocurrencies, calls it rat poison squared, he's like the anti-crypto person. It doesn't mean that you can't learn from 65 years of 20% compounded returns year over year. Clearly, he's doing something right. So if we could take the emotion and sort of the irrationality of the crypto space out and put it into our trading models, or put it into our trading mentality, maybe we would be more successful in the crypto space. And, Ledge, I got to hand it to you. I just learned a ton of information from you both in this space. And one of the things that I got from you was kind of this notion of being able to provide your agent with a skin in the game, right? If you tell it, hey, you had an agent come to you and say, I want a better piece of hardware, and you're like, okay, well, earn it. And so you could kind of figure out a way to talk to this agent or build a bot that says like, okay, you're going to be given this amount of money, and if you achieve a goal, maybe we get to stage 2 and you can manage more money, and I trust you more and we'll give you access to more things. And so that was kind of an interesting role position to start when we created the bot. And then what I essentially was able to do was look at, from Gemini research, take both Benjamin Graham and Warren Buffett's.
Take a step back here.
Yeah.
And like, set it up for us how you even went about setting up the trading bot, what your initial thoughts were, what your thoughts on the setup were, and then dive into the rules and the literature that you used for that, maybe.
Yeah, I mean, so the reason was to be able to say, like, Warren Buffett and Benjamin Graham's thought process was undervalued companies. That was like the whole way that they were able to, in the 1950s and 60s, create a what they called margin of safety, and a way to be able to take positions in companies that actually had really solid businesses that were trading at discounts under book value, and could be held for a really long time because they knew what that business was going to look like in 10, 20, 30, 50 years. Think Geico, American Express, See's Candy, a personal favorite of mine. And how do we crystallize that kind of strategy into a trading bot? Which led me to use Gemini's deep research to say, build me a report that effectively really exhaustively talks about how that strategy was successful. And then I gave that report to Claude Code and said, hey, let's internalize these these metrics and the things that we look at in terms of undervalued companies, and somehow translate that into how we look at cryptocurrencies. So a lot of things that we looked at were like oversold statistics, RSIs, sentiment, and scoring mechanisms on that. And then we were able to, you also got to kind of narrow the scope a little bit. It was a really tough thing to say, let's do every cryptocurrency, but because you can have Solana trade really cheap, there's pretty good assets on there, you can get a lot of liquidity, come in and out of tokens pretty quick. We set up the framework to just use a Phantom wallet and to use a Jupiter decentralized exchange, and engage with the tokens that are on there currently.
Gotcha. And maybe adding on that, and also connecting to something that I saw on the website. There we go. On the NI enablement part. So you have a lot of people right now experimenting with trading bots. You have a lot of people experimenting with, hey, Gemini, help me find an undervalued stock in the S&P 500. You have GitHubs like Dexter, which you've probably certainly have seen, which is also basically connecting to an API service that has access to a ton of financial data that's specifically catered for AI agents to be used, and provides you with a Claude Code like interface where you also can try to find some sort of alpha in the market. And you're also quoting some interesting stats in there, most importantly saying that 66% of Americans are using AI for investment advice, and also in our generation, Gen Z millennials, that 82% are using AI generally for advice. So do you think that for the average user, AI is already at a point where you can use it to get like sensible help for investment decisions and investment advice? And if yes, what are like some of the things to keep in mind when you want to work with an AI tool to get some sensible information and not fall for typical fallacies, biases, or other thought traps?
It's a very, very important point. And we see this. I mean, you brought this up with the Claude Code wealth management piece, right? You're going to have access to tools that are kind of dangerous. That's like me going to a doctor and using AI to diagnose myself when I've been taking a bunch of x-rays. Like, I don't necessarily know how to interpret that data. So while I encourage people to use it to maybe evaluate their portfolio currently, or better understand a certain asset class. We saw the Perplexity computer come out. It's like a Bloomberg terminal. You always got to be careful about the garbage in, garbage out problem, right? Like if the data that's being fed is not correct, or it's not really accurate, or you may get hallucinations back. So you just really want to be cognizant of not taking quote unquote investment advice from your AI. What I find helpful is to have a thesis up front and have that AI agent push back on it or give you other feedback or ask questions or interview you about what your goals are, what your plans are, what your risk tolerance is, so that it can kind of get a better understanding of what context you're putting this in. When you talk to a financial advisor, the first thing they talk about is not necessarily your portfolio, but it's like, what are your goals? What are you trying to do with this money, right? Do you have kids? Do you have beneficiaries? Do you want to set up a trust? So all of that has to happen before you actually get to the planning of that investment advice. And so I think it's just important for people to consider that, like, you can't go in there and say, like, show me the ticker that's going to go up 10x and expect to get something that is going to work 100% of the time, right? And so I think you just have to be very cautious with it. Is it a good tool? Absolutely, but take it with a grain of salt. And I would say one actionable thing that people can do, if you're like with Robinhood using maybe some of their wealth management tools, you can use those together, and that would be pretty good. But you really don't necessarily need a financial advisor unless you're really looking at, I want to say high five figures or even six figures in terms of actual wealth management, and mostly because there's fees involved, right? And you don't necessarily want to be paying fees when that could detract from your compound returns over time, and you should be just looking at, slow and steady wins the race.
So talking about being a financial advisor, Matthew, what is the way that people should think about their wealth at different stages of their journey? I'd let you bracket it up in however you think best, but how do you think about risk reward for people at different stages of their journey?
So the best book that I think people should be reading, while Morgan Housel's The Psychology of Spending, or the Psychology of Money, is very, very good, The Art of Spending Money, I think, is even better and more practical for people who are looking to kind of understand where the financial journey is for them at that particular point in time. And it's important for people to kind of establish, how many working years do I have left, or how much income do I need over the course of 10 or 20 or 30 years? Yeah, this one, fantastic. And in the sort of latter part of this book, I actually had a post on this. He talks about what those brackets are like, there's like 15 different levels of sort of money and wealth that he talks about. And the one that I think people should really strive for, and as Warren Buffett would say, more money doesn't make you happier, right? I know plenty of millionaires who are not thrilled with themselves. So if you're not happy with a salary of 50K or a net worth of 50K, you're not going to be super happy with the $50 million one. And it's the idea that, like, for me personally, money is just independence tokens, right? They allow you to live a life that you want to live, not necessarily spend on the things you want to spend, but maybe eat some good food, take good experiences, and enjoy life the way you want to enjoy it. And so it really helps frame this for people in a way that says, really, are you trying to achieve a certain goal about about like what money is in this perspective? Because in other cases, it's really just showing off to other people and trying to get validation for the stuff that you do. So I think that kind of framework is really helpful in terms of people's goal setting when they're looking at what they want to do or how they want to plan their money. Certainly, as somebody who's younger in the space, you have a lot of time. So you have a lot more risk that you can take, where, if you're somebody who's like 50 or 60 or in retirement, you want to be a lot more concerned about that income and making sure we're going to get that income, particularly because, especially in the United States, we have concerns about things like Social Security and being able to live off of some of the benefits that other people have. I don't know that I'll necessarily be able to benefit from that. And if AI is doing what it's going to do, we're probably going to live to 100 or 110 or 120. And the longer lifespan means you either got to work more or you've got to make your money work harder for you so that you can just enjoy your life and have that, set of income. So I always encourage people to think about what you want your life to look like 20 or 30 or 40, 50 years from now, how much money that's going to cost, and then back into what that income generation looks like on an annualized basis. So when we look at like endowments or pensions or retirements, it's about how much you have to put up without having to remove, put up with yield that you can get 6 or 7%, whatever that is, and not have to touch the principal effectively. So that's kind of how I think about it. It's not necessarily just make as much money as you can. It's use it for independence and use it for the best way you want to live your life.
Yeah, that's a fantastic point. And you also tied AI into this thought process too. Maybe we discussed it a bit at the beginning of the interview. Certainly, also is a bigger part of the show. The Citadel article on the one hand, the Citrini article earlier this week. On this like Citrini-to-Citadel scale, where would you place yourself on?
You know, I think that I've taken a lot from hearing you, Legendary, and a couple other friends say the most important thing you can do right now is just upskill yourself. I don't necessarily know where this is going to go, but I know that when I was a kid, it was the coolest thing to figure out how to make my internet go faster, how to burn CDs, how to create my own applications, how to just like mess around.
Yeah.
And that stuff leads to a framework that we have now, which is, again, you're in the sandbox, play around with it, upskill yourself, be fluent in it so that you can help others. And all of a sudden that's going to start to have its own business opportunities in the future. I can't be fully doomerist on this. I also can't be like, this is going to be the greatest thing ever. I have my own concerns, but at the same time, the more afraid of technology you are, I think the worse you tend to perform just in like life in general. I am a tech forward thinker and person. And I tend to think, the doomerism can be overblown, but there are things to certainly take into consideration.
Yeah, fair enough. Look, final question for you as we get to the end of the show, unfortunately. Is there anything in particular you are working on when it comes to this upskilling side of yourself? Is it the trading bot you mentioned? Is this one still up and running? Has it reached the next stage to get more money, or are you focused on other AI or upskilling endeavors at the moment?
I am, and I actually was able to post the same bot over to Alpaca through an API. What we're doing some paper trading right now, so it'll do crypto and equities. We've also got it piped into Kalshi to be able to do potential sports betting. And then last night I was able to create a backtesting dashboard that allows for basically sliders in here. Like I was able to code an application where you can backtest any strategy. And it's just amazingly effective. And it's really cool to see how you can do this all through your own computer within the same day. So it becomes that. And then the next stage, as you would know, Legendary, it's getting your agents to have their own agent teams and have a portfolio management system so that you can take the emotion out of trading. You can let this stuff work while you sleep. So that's kind of where I am. And I just, also want to thank you guys so much. You have, for flowers for you both and even for Brett and the team, like years you've been here consistently giving education to everybody. And I am a benefactor of that. And I just am very, very grateful for all the work that you do. And just excited for you to keep it up and watch your adventure like unfold.
Awesome. Thank you so much, and thank you for the flaws. And you're way more reasonable about the autonomous trading than I am. The way I did it, I gave my agent 2K as a little test, and I told it, read the Hyperliquid API docs, figure it out yourself. And the first thing it did is created a sub wallet, sent the money there. I was like, oops, I didn't take note of the private key, so I lost your money. But hey, I'm gonna work double as hard if you give me a second chance. So definitely, if you want to play around with autonomous trading, do Matthew's approach. Be a reasonable person. Let it paper trade first, and don't tell it to figure out everything at one go, or you will end up like I did. Matthew, it's been a pleasure to have you on the show today, and that is also bringing us to an end of today's show. Thank you so much for joining us. B, thank you so much for co-hosting the show with me today. We are going to be back tomorrow, same time, same spot, 7 a.m. Eastern time. We're also going to be back with another interview. We're going to have Serp, founder of Ethos Web3 Reputation Layer, joining us for, I think, the second time on the show, if I'm not mistaken, to tell us what is going on in the Ethos ecosystem on the one hand, but also probably I'm going to try to guide this conversation a bit into vibe coding as well, because Serp was actually very, very early to that and is building quite a few very interesting tools. But more on that tomorrow. In the meantime, take care, enjoy the rest of your Thursday, and see you tomorrow.